Next amendment in the area of zero rating, we have already seen this. We have already seen this at least twice. Section 16, zero rated supplies export of goods and services, any supply of goods or services or both to an SEZ unit or an SEZ developer. Now, what is meant by export of services? Section 2, clause 6 defines export of service. The supplier of service, service provider should be in India, service recipient should be outside India, place of supply should be outside India, consideration should be received in convertible foreign exchange. So far it was so much. After the amendment in section 2 clause 6 in the definition of export of service, the amendment is or in INR wherever it is permitted by Reserve Bank of India. So now friends, even in the consideration in the case of export of service, even if it is received in INR, in those cases where it is permitted by the Reserve Bank of India, it qualifies to be an export of service. Friends, please remember and understand, this consideration being received in forex or in convertible foreign exchange or in INR is applicable only for exportation of services. For exportation of goods, there is no such criteria. The moment the goods are taken outside the country, it happens to be an export of goods. So, in export of service, there was a criteria that consideration should have been received in foreign currency. Now, it has been extended or in Indian rupees wherever it is permitted by Reserve Bank of India. The last condition is the supplier and the recipient should not be merely establishments of distinct persons. So, this is the change. Section 2 clause 6, amount can be received in INR wherever it is permitted by Reserve Bank of India. Still it will amount to export of service. Still it will qualify to be a zero rated supply. Friends, let's see one example where a supply is actually fitting into residual cases and becoming an interstate supply. Friends, there is something called as PSLC, that is Priority Sector Lending Certificate. Now, what is all about this PSLC? Friends, Reserve Bank of India has got a policy of priority sector lending. Reserve Bank of India has got a policy of priority sector lending. Essentially, it is something like this. Certain few important sectors needs to be given more attention as regards as the loan portfolio of the bank is concerned. So, roughly I am telling you, it is not the exact figures. RBI tells you agricultural loan plus home loan put together should form at least 40% of loan portfolio of a bank. I am just roughly telling you, these are not the exact figures. We are just trying to take the gist as to what is priority sector lending certificate. Now, RBI has a policy of priority sector lending. Certain sectors should get primary importance, they should get more importance and more attention. So, therefore, it is telling you any bank which is there, its loan portfolio should consist of at least 40% towards agricultural sector and home loan sector. Now, friends, take an example. Let us suppose this State Bank of India, which is there in Whitefields, Bangalore. Now, this bank is unable to meet this 40% criteria because of its location. Because of its location, all the bank's borrowers are corporate clients. They are all business loans. So, therefore, agricultural and home loan doesn't constitute 40% of the loan portfolio of this particular branch of State Bank of India. Now, let us suppose, friends, there is Mandya, where there are predominantly there are agricultural activities. There is Mandya where there is a branch. Let us suppose there is an Oriental Bank of Commerce in Mandya, and its loan portfolio is consisting of, out of 100%, it consists of at least 90%. 90 out of 100% it's towards agriculture. So, now friends, you have two different organizations, two different branches of different banks. State Bank of India Whitefields branch, it is unable to meet this 40% criteria, whereas Oriental Bank of Commerce is actually meeting this criteria excess than what is required. It is required only 40%, but because of its locational advantage, this Oriental Bank of Commerce of Mandya is actually able to meet 90% because it is predominantly an agricultural area. Now, friends, the bank's policy, the Reserve Bank's policy is fixed. You have to meet 40%. Now, if you look from primary sectors lending, Oriental Bank of Commerce has done a better job because it has met 40% and travelled beyond 40%. So, this bank should be incentivized. Some incentives should be given to this bank wherever On the other hand, State Bank of India has not met the target, maybe because of its locational disadvantage, never mind, but here somehow this target of State Bank of India should be met. So what mechanism is there is this Oriental Bank of Commerce, whatever excess it has met, it will convert this into certificates. Whatever is the excess, let's suppose 40% is required, they have met 90%, so 50% loan portfolio, it will convert this into certificates, and these certificates can be traded. Now, State Bank of India can buy a certificate from Oriental Bank of Commerce at premium rates. At premium rates because it needs to be incentivized. So, at premium rates, SBI will buy these certificates. These are priority sector lending certificates from Oriental Bank of Commerce at premium rates. Now, by this mechanism, what happens is the shortfall of State Bank of India can be met, and the excess which is being given by Oriental Bank of Commerce, that can be incentivized. Oriental Bank of Commerce will receive certain incentives in the form of premium payment for these certificates. Friends, please understand the loan portfolio doesn't change. Whatever is the value of certificates which is being bought by State Bank of India, the loans are not going to be transferred to SBI. The loan still remains in the books of Oriental Bank of Commerce. It is only a manner of filling the shortfall and incentivizing that banks which are actually meeting the targets. Now friends, the question is, what we are trying to understand is, we are trying to understand what is PSLC. It is Priority Sector Lending Certificate. We knew the background, how it is coming. Now the question is whether this PSLC is goods or it is services. It is a supply. Some premium is being charged for this certificate. It happens to be supply, whether it is goods or it is services. So there was a circular 3408/2018 which told you, in Reserve Bank of India FAQ on PSLC, it has been mentioned that PSLC may be construed to be in the nature of goods, dealing in which has been notified as a permissible activity. Now the second question comes is, this is a reference which is taken from RBI FAQ. However, one doubt which was there is, goods doesn't include, according to GST law, goods doesn't include money, it doesn't include securities. Can you call priority sector lending certificate as securities? So when you look into the definition of securities, PSLC cannot be called as securities as well. So ultimately they end up being goods. So friends, priority sector lending certificate is goods. PSLC are not securities. PSLCs are akin to freely tradable duty scrips, renewable energy certificates or replenishment license, etc. Now what is duty scrips, friends? Let's suppose you are an exporter. Now when you are exporting goods, the government wants to incentivize you. So therefore, they are giving you a benefit in the form of scrip. They are giving you a benefit in the form of scrip. Let's suppose the scrip is worth 10,000 rupees. Now what you can do with this scrip is, when you are going to import, I repeat, let's suppose you are an exporter, the government wants to incentivize you. This you will be seeing in your foreign trade policy. The government wants to incentivize you. So therefore, it is giving you a scrip which is worth 10,000 rupees. Now what you can do with this scrip? It is not cash, it is not encashable as well. So this 10,000 rupees, you can use it for paying customs duties. So when you are going to import these goods, when the goods are going to be imported, when basic customs duty needs to be paid, you can use this scrip for payment of customs duties. Now friends, as regards as this exporter is concerned, if he is also importing goods, there is no issues. Next time when he is going to import goods, rather than paying customs duty, he will encash the scrip. He will use the scrip for payment of customs duties. However, if he is not exporting, if he is not importing goods, what is the use of scrip to him? So friends, these scrips are freely tradable. This person can sell this scrip worth 10,000 rupees to any other importer who is actually importing goods, and that person when he is importing goods, he can use this scrip for payment of customs duty. And these scrips usually trade at a discount. Naturally for discount, see, if there is a scrip worth 10,000 rupees which I am having, which I want to sell it to an importer, I tell him you pay me 10,000 rupees, take this scrip. What is his benefit? If he wants to pay customs duties, why will he pay me 10,000 rupees, take the scrip and use the scrip for payment of customs duties? Rather, he would directly pay 10,000 rupees the customs duties itself. So these scrips trade at discounts. So I might sell the scrip at 9,000 rupees, 90% discount. So I will give this scrip, I will get 9,000 rupees. Now that person has paid 9,000 but has got a scrip worth 10,000 rupees. Now when he is importing goods to the extent of customs duties of 10,000 rupees, he can use this scrip. Now the question is, This scrip which is there, it is freely tradable. Is it goods or services? It is goods. So it is telling you how these scrips are goods. Similarly, PSLC is also goods. So friends, so far what we have discussed, only 2 points. We have understood what is priority sector lending certificate. We have understood that PSLC is goods and it is not securities. Now comes the main question. If it is goods, and in our example, State Bank of India of Whitefields branch is purchasing PSLC from Oriental Bank of Commerce, Mandya. Both are in Karnataka. Oriental Bank of Commerce, Mandya in Karnataka, State Bank of India, Whitefields in Karnataka. Both of them are in Karnataka. OBC is supplying PSLC certificates to State Bank of India. What is the place of supply and what is the nature of supply is the question. Whether it is an intrastate supply or it is an interstate supply. Let's assume the PSLC is worth 10,000 rupees roughly. So on this 10,000 rupees, what needs to be charged, whether it is CGST, SGST or whether it is IGST. So I need to know the nature of supply. For knowing nature of supply, I need to find out the place of supply. Now friends, there are certain cases where even without finding out place of supply, you can find out nature of supply. But what are those? Now since PSLC is goods, is it export of goods? The answer is no, it is not export of goods. Is it supply of goods to an SEZ? It is not supply of goods to an SEZ also. Then is it a domestic transaction? The answer is yes. So if location of supplier and place of supply are in two different states, it is interstate. Location of supplier and place of supply in same state, it is intrastate. We know location of supplier. Location of supplier is OBC, Mandya. What is place of supply? Let's find out what is the place of supply. So friends, place of supply for goods, section 10 and section 11. Section 11 is for exportation of goods. Section 11 is for exportation of goods. Now friends, another important point which I would like to tell is this PSLC certificates. First I will tell you this very important point and then we will proceed further. How are these PSLC certificates traded? Now this PSLC certificate is going to be supplied by OBC Mandya to Whitefields of State Bank of India, to State Bank of India of Whitefields. Now friends, these PSLC certificates are traded over eKuber portal of Reserve Bank of India. There is a designated portal for it called as eKuber portal. There the branches who are having excess can supply to those branches who have not fulfilled the target at some premium rate. So all these PSLCs are traded over the eKuber portal, online portal of Reserve Bank of India. And friends, actually there is no delivery of PSLC certificates which happens. It is only an intrinsic value. The moment you pay, those points come to you. It is only an intrinsic value which gets added. There is as such no physical delivery of these certificates which happen. It is only the intrinsic value which State Bank of India on payment of that premium, it gets entitled to this intrinsic value of the certificate. Now having said this, let us find out what happens to be the place of supply, because it is not an export of goods, not a supply of goods to the special economic zone. It is a domestic transaction. For domestic transaction, location of supplier and place of supply, different states, interstate, same states, intrastate. We know the location of supplier, it is Mandya. Place of supply. Coming to place of supply, section 10 and section 11 is for goods. Section 11 is for import and export. It is not an import and export. Now coming to section 10. What does section 10 tell you? Where the supply involves movement of goods. Is PSLC goods? The answer is yes. Does this supply involve any movement of goods? The answer is no, because it is traded online, eKuber portal. You pay an amount, you receive the intrinsic value in your account. That's it. There is no movement of goods at all. So where the supply involves movement of goods, it shall be the location of goods at the time at which the movement of goods terminates for delivery of the recipient. However, you are not bothered because this supply doesn't involve movement of goods. Second one, where the goods are delivered by the supplier to a recipient or any other person on direction of a third person, not covered over here as well. Third one, where the supply does not involve movement of goods. Yes, this is PSLC, this is goods. It doesn't involve movement of goods. What is the place of supply? Place of supply shall be the location of such goods at the time of delivery to the recipient. Friends, agreed that it is a supply which does not involve movement of goods. What will be the place of supply? Place of supply shall be the location of such goods at the time of delivery to the recipient. Now friends, here it is only an intrinsic value to which the State Bank of India's branch becomes entitled to. There is no delivery which is possible. These PSLC certificates are incapable of delivery. It is actually only points which are getting added. It is only an intrinsic value which gets credited. So therefore, though these are goods, but they are incapable of delivery. Now friends, this is a supply which doesn't involve movement of goods. When it doesn't involve movement of goods, the place of supply is telling you the location of goods at the time of delivery. Delivery of PSLC certificates is not possible because it is the nature of points. You get entitled to intrinsic value. So therefore, here this also is ruled out. Where the supply does not involve movement of goods, you are getting covered over here, but you do not have any place of supply because place of supply is linked to location of such goods at the time of delivery. These goods are incapable of delivery. Where the goods are assembled or installed at site, not possible. Where the goods are supplied on board a conveyance, this is also not covered. So friends, now we have a case where we are unable to find out place of supply for PSLC goods. Section 11, because it is not export and import, we are not going there. Section 10, we come over here. We also fit into this, where the supply doesn't involve movement of goods, but since these goods are incapable of delivery, section 10 is incapable to give me a place of supply for this transaction. What's the solution? The solution lies in this chart, which tells you if you're not fitting anywhere. Is it import of goods till they cross the customs frontier? No. Is it import of service? No. Supplier of goods or services in India, place of supply outside India? No. Supply of goods to SEZ? No. Supply of goods to tourist? No. It is domestic, location of supplier and place of supply in different state and unity. I am unable to find out place of supply. Location of supplier and place of supply in same state or UT, I am unable to find out place of supply. So after seeing that I am fitting nowhere, I come to the residual category and say that it is an interstate supply. I finally fit into the residual category to satisfy myself it being an interstate supply, and hence in this example friends, if you look into Oriental Bank of Commerce is in Karnataka, State Bank of India, Whitefields also in Karnataka, Supplier is in Karnataka, Recipient also is in Karnataka, still it happens to be an interstate supply. Please understand, we are not talking about SEZ. In SEZ it may be possible. Special economic zone, one entity, another entity DTA, same state, it can be an interstate supply. Nowhere concerned with SEZ. Still, location of supplier in the same state, we do not have the place of supply. Therefore, we cannot fit over here. Lastly, we come into the residual cases where it becomes an interstate supply. The same thing has been clarified by Circular 34/08/2018. Let's have a look. Reserve Bank of India FAQ. PSLC, it has been mentioned that the PSLC may be construed to be in the nature of goods. PSLC is not certificate, it's not securities. They are akin to freely tradable duty scripts. So now 93/12/2019, it has specifically mentioned that PSLC trader over e-Kuber portal of RBI shall be an IGST supply. Here you need not see where is the supplier located, where is the recipient located. They may be in the same state, same city. Still PSLC certificates, it is being supplied, it is an interstate supply because of this residual category which is there in section 7. Section 12 subsection 8, place of supply for transportation of goods, services including mail and courier. It tells you if these services are given to a registered person, the place of supply shall be the location of such person. If it is given to a person other than a registered person, the place of supply shall be the location at which such goods are handed over for their transportation. Let's take an example. Let's suppose there is a company XYZ Limited. It is established in Coimbatore. It is a registered person in Coimbatore. It wants to send its goods to one of its customers in Maharashtra. So now they engage Blue Dart. Let's suppose Blue Dart, this wing of Blue Dart which we are talking about is also registered in Tamil Nadu. This XYZ Limited is also registered in Tamil Nadu. So now Blue Dart is supplying services to XYZ Limited. Is it transportation of goods? The answer is yes. Is it given to a registered person? The answer is yes. What shall be the place of supply? Place of supply shall be the location of such registered person. So the place of supply is going to be Tamil Nadu. Location of supplier blue dot also Tamil Nadu. It happens to be an intrastate supply. Scenario number 2. Now what if this XYZ Limited happens to be an unregistered person? Then the place of supply shall be the place where the goods are handed over for transportation. The goods are handed over for transportation in Coimbatore. Location of supplier is Tamil Nadu. Place of supply is again Tamil Nadu. It shall be an intrastate supply. So far there is no change. Now let us discuss what the change which has come. Now friends, let's suppose instead of the goods being sent to Maharashtra, XYZ Limited is a registered person. Now XYZ Limited wants to export these goods through courier. XYZ Limited wants to export his goods through courier. It uses the services of Blue Dart and wants to send these goods to Germany. Now friends, what is going to be the place of supply? Now as regards as goods is concerned, please concentrate, as regards as goods is concerned, is it exportation of goods? Yes, XYZ Limited is sending these goods to Germany. It happens to be an export of goods. Is it interstate supply? Yes. In case of export of goods, it happens to be an interstate supply. So it is an IGST transaction. Is it zero rated? The answer is yes, it is a zero rated supply as regards as exportation of goods is concerned. Now friends, what about the services which is supplied in relation to export of these goods? What is the place of supply of these services? So now friends, Blue Dart is supplying services to XYZ Limited. For export of goods, what is the place of supply? Same thing. Is it given to a registered person? The answer is yes. It shall be the location of such person. So now the place of supply is Tamil Nadu. We are talking about these courier services. Place of supply happens to be Tamil Nadu. Location of supplier, Blue Dart's Tamil Nadu wing happens to be Tamil Nadu. It happens to be an intrastate supply. This was the position prior to amendment. Now what is the amendment which has come? So there is a proviso which tells you, provided that where the transportation of goods is to a place outside India, the place of supply shall be the place of destination of such goods. So now friends, when XYZ Limited, I repeat, when XYZ Limited wants to send its goods to Germany, it uses the services of Blue Dart. What is the place of supply? Now it is not the location of such registered person. After the proviso has been introduced into 12 subsection 8 via an amendment, now the place of supply becomes the place of destination of such goods. Now what is the destination of these goods? The destination is Germany. So now where is the location of supplier? Location of supplier Blue Dart, Tamil Nadu. Place of supply outside India. Location of supplier in India. Place of supply outside India. It happens to be an interstate supply according to section 7 of the IGST law. So in the earlier case, prior to amendment, this was an intrastate supply. Post amendment, it becomes an interstate supply because location of supplier in India, place of supply outside India, it is an interstate supply. Wait a moment. It is an interstate supply, agreed. Is it export of services for Blue Dart? Friends, as regards as goods is concerned, it is an exportation of goods for XYZ Limited. The goods are being sent through courier, taking goods outside India, exportation of goods. Is it an export of service for Blue Dart? Is it an interstate supply? The answer is yes. Is it an export of service? Now friends, what is the definition of export of service? Where should the service provider be from? In India. Is service provider in a given example from India? The answer is yes. Service recipient. Service recipient should be outside India. Now friends, here the service recipient is XYZ Limited who is asking Blue Dart to take these goods outside India. So service recipient is from India. So since the recipient of service is from India, it does not qualify to be an export of service. Resultantly, it doesn't result into zero rated supply. It stops at being an interstate supply. IGST needs to be charged by Blue Dart, and that's it. No more extension of this sequence wherein it can result into an export of service and zero rating benefit is going to be available. So we need to be careful with this. Just by introducing this proviso, it doesn't mean they are going to, it doesn't mean that these services will be resulting into exportation of services and accordingly going to be zero rated. The only change what has happened is It used to be an intrastate supply earlier. Now it is going to be an interstate supply. IGST needs to be paid. It is not a zero rated supply because it is not an export of service, because the recipient of service is from India. Now friend, let's take another example. Now say there is Antrix Limited. There is Antrix Limited who is engaged into satellite launch services. Antrix Limited is engaged into satellite launch services. Let's suppose there is ABC Limited Company of India. So Antrix Limited, let's suppose from Maharashtra. ABC Limited Company, let's suppose again from Maharashtra. Now ABC Limited wants its satellite to be launched. It procures the services of Antrix Limited. What is the place of supply? First of all, is it governed by 12 subsection 8? First of all, is it governed by section 12? So in section 12, the supplier and the recipient both should be from India. Yes, ABC Limited and Antrix Limited both are from India, governed by section 12. Is it transportation of goods? The answer is yes. Satellite launch services is transportation of goods. You have to send the satellite outside India. You have to transport it. It is transportation of goods. So now friends, satellite launch services is also transportation of goods. Now, transportation of goods, agreed. Is it covered by this proviso? The answer is yes. The proviso tells you where the transportation of goods is to a place outside India. It doesn't tell you to a country outside India. Please be careful. Satellite launch services, you do not send the satellite to any other country. You are sending it to space. So the wordings they have carefully used is the transportation of goods is to a place outside India. Space is a place outside India. The place of supply shall be the place of destination of such goods. So now friends, in this case, the place of destination is outside India. Location of supplier Antrix Limited of Maharashtra. Place of supply outside India according to section 7, where the location of supplier in India, place of supply outside India, it results into an interstate supply of services. So this is going to be an IGST supply, even though Antrix Limited and ABC Limited, both of them are from Maharashtra, still it is an interstate supply. Is it export of service? The answer is no, because export of service section 2 clause 6, service provider in India, yes. Service recipient should be from outside India. Here service recipient ABC Limited is from India. It is not an export of service, not zero rated. It stops at being a regular interstate supply. IGST needs to be paid. Section 13, subsection 3, place of supply of services. Now friends, section 13 applies where the service provider or the service recipient, one among them, is outside India. Now 13 subsection 3 deals with performance services. So you have performance on goods. That means those services where the recipient of services is required to make the goods available to the supplier of services to perform the services on those goods. So such type of services, the place of supply happens to be the place where the services are actually performed. So here we go. The services supplied in respect of goods which are required to be made physically available by the recipient of service to the supplier of service or to a person acting on behalf of the supplier of services in order to provide the services. Here the place of supply shall be the location where the services are actually performed. Now friends, to this provision there are two exceptions. What is the provision? For such services, the place of supply shall be the place where services are actually performed. Now to this there are two exceptions. First exception we are not going to discuss now. Second exception is what we are going to discuss because there is a change in the second exception. Now friends, before discussing the second exception, let us first analyze why there is a requirement for the second exception. So here we go. Now let's suppose friends, you are a manufacturer of a high-end machine. So you are a manufacturer of high-end machine. You manufacture this machine and you export it. Let's suppose you are exporting it to USA. You manufacture a unique high-end machine and you export it to USA. Let's suppose you are doing this for say some $10,000. Now, is this transaction an export of goods? The answer is yes. So export of goods means taking goods outside India to a place, taking goods from India to a place outside India. So it happens to be an export of goods. So for export of goods, the place of supply is outside India according to section 11. Now, where is the location of supplier? Supplier is in India. Place of supply is outside India. It happens to be an interstate supply. It also happens to be an export of goods. It is a zero rated supply. So far, so clear. Now friends, let's suppose this machine, let's suppose there's some 1 year warranty for this machine. Now let's suppose after a period of 2 years, there's some problem in this machine. After a period of 2 years, there's some problem in this machine. So this USA buyer is sending this machine back to the manufacturer. He's sending this machine back to you for the purpose of carrying out repairs. For the purpose of carrying out repairs, let's suppose you're charging some $1,000 for carrying out this repairs on this high-end machine. Now friends, the question is, this $1,000 which we have charged, is it any supply of service which you have done? The answer is yes. Now let us find out the nature of supply. For finding out the nature of supply, let us find out the place of supply. So place of supply, whether it is section 12 or section 13 which is applicable, it is section 13 which is applicable because recipient of service is outside India, that USA fellow, and the supplier of service is in India. Section 13 will give you the place of supply. What type of service it is? Is it the type of service which is covered under 13 subsection 3? The answer is yes. Those services where the recipient of service should make the goods available to the supplier of service in order to perform the services. Yes, it is that. So now 13 subsection 3 tells you the place of supply shall be the place where the services are actually performed. Where are the services actually performed? They are performed in India. So this machine manufacturer, assuming you are from Coimbatore. So now these services are actually performed in India, in Tamil Nadu. So now friends, the place of supply according to 13 subsection 3, it is Tamil Nadu. What is the location of supplier? Location of supplier is also Tamil Nadu. Place of supply is also Tamil Nadu. Friends, is it an export of service? Please understand, is it an export of service? The answer is no. Because for a service to qualify as an export of service, service provider in India, in this example, yes. Service recipient outside India, in this example, yes. Place of supply should be outside India. Only then it results into an export of service. Maybe the other two conditions are satisfied. That is, amount is received in forex, $10,000 received in forex. I'm sorry, $1,000 received in forex, and both of them are not merely establishment of distinct persons. All conditions are satisfied excepting that the place of supply of this service happens to be in India. So now friends, it is not an export of service. Leave export of service. It is not at all an interstate supply. Because for interstate supply, location of supplier should be in India, place of supply should be outside India according to section 7, which is not the case. So now friends, it happens to be, it is not an export, not an interstate supply, it happens to be an intrastate supply. Even the amount is received in forex, CGST and Tamil Nadu SGST needs to be charged. So now friends, on this $1,000 converted into INR, you will have to charge CGST and Tamil Nadu SGST. Do you think this is the right practice to promote exports in the country? See, first of all, this USA person will say, your machine turned to be defective after 2 years. I have to send you, bear the transportation cost. On top of it, you are charging me taxes. So is it an encouragement to the export market? So the answer is no. So friends, what they have done is, in the second exception, now if this situation, if this case is fitted into 13 subsection 3, it results into an intrastate supply wherein GST needs to be paid. This GST needs to be collected from the USA buyer. If he is not paying, this machine manufacturer has to pay from his own pocket. So now friends, to overcome this difficulty, what they have done is, these type of performance based services on goods. Which type of performance based services on goods? Where the goods are temporarily imported into India for the purpose of repairs and again re-exported outside India without putting these goods to any other use. For such type of services, the second proviso to 13 subsection 3 clause A is telling you, for these type of transactions, the place of supply will not be determined by 13 subsection 3. Please understand, the wordings used are, for these type of transactions, don't come to 13 subsection 3. 13 subsection 3 will not apply for these type of transaction. So the second proviso to 13 subsection 3 clause A doesn't give you a place of supply. It simply tells you these type of transactions don't come to 13 subsection 3. That means where are you supposed to go? Now friends, you have an orphan, you have a mother of all orphans where it is a general provision which is there. If it is not covered by any specific provision, it goes to the general provision. Now when it goes to the general provision, according to the general provision, the place of supply shall be the location of recipient. Now please evaluate, is it fitting into the definition of export of service? Location of supplier in India, agreed. Location of recipient outside India, place of supply according to the general provision. According to the general provision, place of supply is the location of recipient, which happens to be USA. Place of supply also outside India. Amount received in forex, they are not establishment of distinct persons. Hence, it qualifies to be called as an export of service. It is zero rated supply. Now on this $1,000, no GST needs to be paid. It results into a zero rated supply. So friends, as regards as the proviso to section 13 subsection 3 clause A is concerned, the second proviso, which was actually this type of transactions was subject to tax, the second proviso is trying to grant relief to them and make it as a zero rated supply. Now friends, this is not the change which has come. Now having understood the background, let us discuss what is the change which has come in the second proviso. The change is very simple. It simply first it covered repairs. The second proviso to 13 subsection 3 clause A, earlier it covered repairs, now they have expanded the scope. They have expanded the scope, they have included repairs or treatment or processes. You import any goods for repairs or treatment or processes, re-export them without putting it to any other use, then 13 subsection 3 clause A will not apply. You go to the general provision, place of supply will become location of recipient of service. Now what is the example of treatment or process? Let's suppose, now for jewelry making, there are so many craftsmen in India who have their expertise in jewelry making. So now friends, there's gems industry, gems and jewelry industry of India. So now you have ornaments coming from outside India only for the craftsmanship of Indian craftsmen. So these ornaments, these jewelry, they come outside India. The craftsmen work upon it, they carry out a treatment or a process and then send this jewelry back outside India. Now had this treatment or process wordings not been there, was it covered under 13 subsection 3 clause A? The answer is yes, because it covered only repairs earlier. Now are these ornaments coming for repairs or value addition? The answer is value addition, craftsmanship. So therefore earlier when a jewelry came into India, it was for treatment or process. It was not covered by the second proviso. When it is not covered by second proviso, it means it was covered by 13 subsection 3 clause A, which means these type of transactions resulted into an intra-state supply. Thereby, CGST and SGST was being chargeable. It actually was an export of service which was earning huge foreign currency to the country. So therefore, considering this, what they have done, they have expanded the scope of the proviso. Even treatment, not only repairs, treatment or process also. Any goods come into India, repair, treatment, process, gets back outside India without being put to any other use. They are covered by the second proviso to 13 subsection 3 clause A, wherein it is removed from 13 subsection 3, it goes to the general category and the place of supply happens to be the location of recipient. And if the other conditions are satisfied, amount received in forex, not establishment of distinct persons, it may also result into export of service, resulting into a zero rated supply. Friends, the case of drop shipment. What do you mean by drop shipment? Let's suppose my customer in USA requires certain goods. I instruct my supplier who is there in China to deliver the goods directly to USA. Now, when my supplier is supposed to raise an invoice upon me and the goods are going directly to China and the goods are going directly to USA, it cannot be called as an importation of goods because goods actually do not enter India. Similarly, when I am raising an invoice on my customer in USA, it cannot be called as an exportation of goods because goods are not moving from India to outside India. So this case of drop shipment, when I am making a supply to my customer who is there in USA, it cannot be called as an exportation of goods and hence the benefit of zero rating is not going to be available. However, I do not even require the benefit of zero rating because this, according to schedule 3, this invoice which I am going to raise upon my customer who is there in USA, according to schedule 3, it is neither a supply of goods nor a supply of services. So far, things are clear as regards as goods are concerned. Now friends, let's discuss the same thing from viewpoint of services. Let's suppose my customer who is there in USA requires certain services to be performed. Let's suppose he requires some software to be developed, my customer who is there in USA. Now, I am unable to perform this contract on my own. So what I do is, I subcontract or I outsource this, a portion of the work or the entire work as the case may be. I am outsourcing this work to another software service supplier who is there in USA itself. So friends, I receive a contract from my customer who is there in USA. I am unable to honor this either fully, partially, however it may be. So I am outsourcing this to contract to another supplier in USA itself. So now, who is going to raise invoice to whom? Now friends, he is my customer. Let's suppose Mr. B, Mr. A and Mr. C. Now the first contract is between Mr. A and Mr. C. So Mr. C of USA has instructed Mr. A of India to supply software developmental services. Now since Mr. A is unable to perform, he is subcontracting this to Mr. B of USA himself, and Mr. B is performing these services for Mr. C. So now friends, how many invoices are going to flow? You have A will raise an invoice upon C. A is going to raise an invoice upon C because this was the main contract, and B is going to raise an invoice upon A due to the subcontract. So this is going to be invoice number 1. A is going to raise upon C for the main contract. B is going to raise an invoice upon A for the subcontract. It's going to be invoice number 2. Now friends, please bear in mind, B is in USA, C also is in USA, A is in India. Now friends, is this transaction covered under Schedule 3? The answer is no. Schedule 3 covers only drop shipment in case of goods. Only in case of goods, this type of transactions were covered under Schedule 3, which was neither a supply of goods nor a supply of services. However, this is not the case in case of services. So in services, friends, you need to analyze each transaction independently. In services, you need to analyze each transaction independently. Friends, what is the differentiating point is? The differentiating point in case of goods, the physical entry of goods into India, and physically the goods living outside India, only then it was called as import of services, import of goods or export of goods. But in case of services, that physical entry is not required, physical exit is not required. The place of supply is sufficient. In case of services, if the place of supply is outside India, it is an export of services subject to other conditions being satisfied. If the place of supply is inside India, it is an import of services subject to other conditions being satisfied. So now friends, this transaction needs to be evaluated independently. So now when A is going to raise an invoice upon C, you have to check whether this amounts to export of services independently. So you have to check whether the service supplier is in India, assuming A is in India, yes, service provider in India. Service recipient outside India, yes, satisfied. Place of supply outside India, you have to go and see section 13 for the nature of services what you have supplied, whether the place of supply happens to be outside India. So if assuming place of supply is also outside India, and for the software developmental services, place of supply is outside India as per the example what we have taken. So place of supply is also outside India, but you have to evaluate on case to case basis whether the place of supply is outside India in accordance with the provisions of section 13. Next is amount received in forex or wherever permitted in INR, assuming yes, and the establishments should not be establishments of distinct persons. If all these conditions are satisfied, this happens to be an export of service and 0 rating can be permissible. Now this transaction, Mr. B of USA is going to raise an invoice on Mr. A of India. As regards as this transaction is concerned, let us evaluate independently whether it amounts to importation of service or not. So location of supplier is outside India, yes. Location of recipient, now Mr. B of USA is the supplier and Mr. A of India is the recipient. Location of recipient inside India, yes. Place of supply inside India, now it is again same software developmental services. Place of supply happens to be inside India, it fits into the general category. Location of the recipient of service, so place of supply happens to be inside India. So in place of supply happens to be inside India, this happens to be an importation of service and GST needs to be paid under reverse charge mechanism. So friends, this is what we are trying to discuss. We need to evaluate transactions independently. In case of goods, it was neither a supply of goods nor a supply of services for drop shipment, but in case of services, it will be parallelly, it has to be independently evaluated it can be an export of service and it also can be an import of services if all the conditions what we have seen are satisfied. Another issue is, friends, let's suppose the contract is for $10,000. Let's suppose the contract is for $10,000. Now, after you complete the services, Mr. C is supposed to pay Mr. A $10,000. And let's assume some 40% of the work was outsourced to Mr. B of USA. 60% of work was done from India. 40% of work was outsourced to Mr. B of USA. And out of this entire $10,000, what this Mr. C of USA does is, he directly pays $4,000 to Mr. B of USA and is paying $6,000 to Mr. A of India. This is based on the instructions of Mr. A. This is purely based on instructions of Mr. A. He is telling Mr. C of USA, pay $4,000 to Mr. B of USA and pay the rest $6,000 to me. So, this Mr. C of USA agrees and is paying the transaction value as $4,000 to B and $6,000 to A, because 40% of the work was outsourced to Mr. B. This Mr. C has got nothing to do. He is only purely acting on the instructions of Mr. A. You pay him $4,000 and pay me $6,000. Now, friends, the question is, we were just analyzing that the transaction between Mr. A and Mr. C happens to be an export of service, because supplier is in India, recipient outside India, place of supply outside India, but receipt of foreign exchange. The invoice was raised for $10,000. Amount received is only $6,000. So, friends, can it still be called as an export of service because an amount is not received? You did not receive the foreign currency to the entire $10,000. Can it still be called as an export of service? The answer is yes, because, friends, what is the intention behind the government putting a condition that you should receive foreign currency? It is essentially to increase the forex reserves. Now, friends, had he received $10,000, he should have paid $4,000 to Mr. B of USA. So, effectively what retains in India is only $6,000. Effectively, what would have remained in India is only $6,000. Either C of USA would have paid to Mr. A $10,000 and he would have in return paid to Mr. B $4,000. So, in India, what would have been retained is only $6,000. So, even otherwise it is making sense. So, therefore, the transactions can be netted off. The transactions can be netted off. It will be sufficient if $6,000 is paid to Mr. A. For the entire $10,000, it will be considered as an export of service, but with one condition. With one condition stating that for the balance $4,000, IGST should be paid under reverse charge mechanism because it happens to be an import of service. I repeat, $10,000 entirely will be considered as an export of service. There is no doubt about it. But with a condition, it is actually not a condition. It is just telling you, you will have to evaluate the transactions independently, even without it specifically telling, it is still the same. This has actually been told in a circular. So, the circular is going one step further and just clarifying it that yes, for $10,000, I will treat it to be an export of service, even though you are receiving only $6,000. But please ensure that you are paying GST under reverse charge mechanism for that $4,000 for which B is going to raise an invoice upon A. So, friends, here we go. Have a look at the circular 78/52/2018. It tells you ABC Limited India, example, has received an order for supply of services amounting to $5 lakh to a US based client. ABC Limited India is unable to supply the entire services from India and asks XYZ Limited of Mexico to supply a part of the services, say 40% of the total contract value. ABC Limited India shall be the exporter of service for the entire value if the invoice for the entire amount is raised by ABC India. The services provided by XYZ to the US based client shall be importation of services by ABC, and it would be liable to pay integrated tax on the same under reverse charge mechanism, and also eligible to take input tax credit of the IGST paid. Further, say only if 60% of the consideration is received in India and the remaining amount is directly paid by the US based client to the XYZ Limited Mexico. Even in such a case, 100% of the total contract value shall be taken as consideration for the export of services by ABC Limited, provided subject to IGST on importation of services has been paid on the part of the services provided by XYZ Limited Mexico directly to US based client. So, he is actually performing to the US based client, but the recipient of service is the person who is there in India, because he is the person who has outsourced the work, he is the person who has given the work. And Reserve Bank of India, by general instruction or by specific approval, has allowed that a part of the consideration for such exports can be retained outside India. So, even this should be allowed by Reserve Bank of India as well. In other words, in such cases, the export benefit will be available for the total realization of convertible foreign exchange by ABC Limited India and XYZ Limited Mexico. Section 14 of the IGST law, which tells you where OIDR services are supplied by a person located in non-taxable territory to an NTOR, that is non-taxable online recipient, then the liability to pay the GST for such services shall be on the supplier of services. The liability to pay GST on such services, it is under forward charge mechanism. OIDR who is located in non-taxable territory is supposed to pay GST. Now, what do you mean by a non-taxable online recipient? That has been defined section 2 clause 16. It tells you government, local authority, governmental authority, individual or any other person who is not registered, who receives OIDR services for other than commerce, industry, business or profession. Now friends, what the change is? The change is very simple, nothing too much to worry about. You have something called as governmental authority. They have amended the definition of governmental authority. So, the governmental authority, section 2 clause 16 of the IGST Act, it tells you an authority or a board or any other body which is set up by an act of parliament or a state legislature or which is established by any government with 90% or more of equity participation. Friends, as we already discussed, this 90% or more of equity participation is applicable to both, to the boards which are established under an act and also to those boards which are established by the government. To both these kinds of boards, this qualification of 90% or more of equity participation does apply. And further it tells you a panchayat under article 243G or a municipality under article 243W of the constitution. The only change is the panchayats under article 243G of the constitution is brought inside the definition of governmental authority. So, this seemed to be an accidental omission because wherever they have included municipality under article 243W of the constitution, equally they would have included panchayat under article 243G. However, now since this was not there in the definition of governmental authority, they have now included panchayat under article 243G into the definition of governmental authority. So, these authorities, these panchayats under article 243G also will become a non-taxable online recipient if they are receiving these services from an OIDR of non-taxable territory for any purpose other than business, trade, commerce or profession.